Welcome to the channel. My name is Nick and I'm a top podder on TradingView with over 260k reputation points, and every day I share a lot of free education and analysis for all of you. So make sure that you subscribe to the channel so you don't miss out on all this free content, and I will see you on the charts. In today's video, I want to speak about gold. Now, why do I want to speak about gold? Because at the moment we do have quite interesting price action and structure. So what I will be doing is, as usual, providing a complete multi-time frame top-down analysis. First, covering the technical aspect that we currently have. Then we will go and see what we have from a COT perspective, so commitment of traders, which is basically what hedge funds and the non-commercials, so the biggest speculators in the market, are doing. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for a potential move here on the pair action, in this case also on the commodity. Now, starting from the monthly time frame, we can see how the market has just printed a very strong impulse to the upside, followed by this complex correction. Now, in general, after an impulse, if you want to measure the correction, you have to take your Fibonacci from the low to the high of the impulse. And if we do that, we can see how the market has just retraced exactly to the 0.618, which is the golden ratio of the Fibonacci taken on this monthly impulse. The market first tested it here, again here, and obviously both times the market got rejected to the upside. We can also see how at the moment the level that we are rejecting is the 50%. So what is happening is that at the moment we are testing the Fibonacci levels one by one and rejecting them to the upside. First at 0.618 and now the 50%. So here in the monthly, everything seems very bullish and we can expect more continuation to the upside, considering that it definitely seems like inflation was not temporary, and in situations where you have high inflation, like the one that we're living right now, stores of value like gold should appreciate. Dropping down on the weekly time frame, what we can see is that with this move to the upside here, there was one candle not related to the move, which was exactly this red candle here. Now, when you have an impulse to the upside and there is one candle not related to the move, that candle is actually a strong structure candle. Now, in this case, since the market is approaching it from above, it is previous resistance which is turned support here and again support here. And as we are testing this previous resistance turned support, we did expect the market to reject it to the upside. And in fact, that is exactly what the market is currently doing. And we are also completing this weekly impulse correction and impulse pattern to the upside. So here in the weekly, everything seems very bullish and we can expect more continuation to the upside. Just a quick thing, make sure that you like, subscribe, and let me know in the comments below any suggestions for new videos. Dropping down on the daily time frame, what do we see? Now, here on the daily, we did speak about gold after this move to the upside here. After this impulse, I made a full breakdown explaining all the reasons for which first we wanted to see a correction at least to the 0.32 Fibonacci taken on the daily impulse, and then we wanted to see the continuation to the upside. And in fact, that is exactly what the market just provided here. And by the way, I will link this previous analysis in description so you can go and check it out for more free education. However, at the moment, what do we have and how we can be looking for the next potential move? Now, here in the daily, we can clearly see how the market is breaking above resistance. This level was acting as resistance here, again here, and again here. At the moment, we're breaking above it, which obviously makes this previous resistance now turn support here. So what we can expect is a retest of this previous resistance turn support before then getting a potential rejection even higher. If we take our Fibonacci on this impulse here, we can also see how if the market starts the correction from here, the 0.32 would already be lining up with this previous resistance turn support, creating even more confluence of support here, from which then a rejection to the upside could happen. Now, if we go and see what we have when it comes to the COT data, so the commitment of traders, which is what the non-commercials and the biggest speculators in the market are doing, we can see how in the long term net positions have been increasing. We went from having 168k net positions up to having 199k net positions, with currently 290k longs and only 90k shorts. Now, in the short term, yes, we did have a decrease of the net positioning, but we already saw that also reflected in the price action. But in the long term, everything seems very bullish. So as we have already seen by looking at the monthly and weekly, we can expect more continuation to the upside. Now here on the daily, if the market will actually manage to retrace back to this previous resistance turn support, inside of here, how we will be looking for this potential longing opportunity with students. Now, as usual, we will be reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best timeframes when it comes to the directional aspect of the market. However, when it comes to confirmations and entries, the best timeframes are the intraday timeframes, so 4 hour and lower. Therefore, after the impulse on the retest inside of here, we will be monitoring price action from an intraday perspective, waiting for the market to shift from an intraday bearish market as we will have to an intraday bullish market. And if the market will shift from an intraday bearish to bullish market and provide to us one of our valid entries at that point, we will be looking for a potential long with a good risk to reward and good probabilities at that point for the move to the upside and for the market to complete this impulse correction and impulse pattern to the upside and to create a new daily higher high. If you enjoyed the video, make sure that you smash that like button and comment below. It really does support the creation of more free analysis education and updates for all of you. You can also go and check out the mentorship program. The link is in the description. It's a very complete program. First, you learn all the rules of my rule-based strategies. Then every single day you get a new daily market breakdown showing you how to apply the strategies in live market. And you also get your questions answered every day in the daily Q&A session. So it's a very complete program. I really suggest that you go and check it out. The link is in the description and I will see you in it.